Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In this video I'd like to take a look at how the 4 US minis unfolded yesterday, which was June the 7th. This is a very good example because it shows how we use the higher time frame to help gauge trades on the shorter time frame charts. So for example, if I look at some of the E-minis here, you can see on the ES we had a potential long trade set up here with the blue STF. The market basically went sideways before declining down later, if I clear the analysis off, later in the afternoon. So the question being is, why did the market basically not carry on rallying up off the setups with the blue STF, and why did it decline later in the day? Well, as we've gone through in other videos, the STF is just an indicator, and just like all indicators, they're calculated using history. Therefore they'll always be lagging as a market turn unfolds. This is why we use DPs and WPTs in Elliott wave analysis, because it's leading. In other words, it can be projected on the charts in advance. So I wanted just to show that and how that can be used to anticipate great trades, and particularly yesterday was a good example. So for this, if we're trading on 3 and 5 minute charts, we first of all go to the 15-minute charts and put our DPs on. Now remember, these can be on the chart in advance. So if I go back to before yesterday even opened, here was a major pivot. You can see that was sort of in the area where we're coming up to. So to put the DPs on the chart is really easy. We hover over the bar, right mouse click, select DP. And here you can see this decision point was on this chart before the market even opened. So let's see what the ES did during the day. Well, here is what happened. The ES gapped up, went straight into this decision point resistance, and then declined for the rest of the day. So here you can see that this decision point gave us early warning of a potential resistance that actually nailed the very high of the day and defined the trend down for the rest of the day. Let's have a look on the YM. Again, remember, these are on the charts before the market even opens. As you can see on the YM, that nailed the high of the day, defining the trend as down. I want to go to the Russell Index. Again, from that same pivot, exactly the same thing, up into a decision point resistance, market then declined. Now the NQ was very good, because the NQ, if I look at this DP level, we can see that's exactly what happened as well. Market went up, it went just a little bit above it, but then declined down. But also, if we look at the Elliott wave pattern on the NQ, you can see that we had these swings coming up here. To place the Elliott wave pattern on the chart is very easy in MTPredictor. We hover over the bar, so just as this bar came in, we then do right mouse click, Elliott wave intermediate, and can you see how this high here was actually 1, 2, 3, 4, 5, with the high, literally the high of the day, being tagged perfectly by the minimum wave 5 WPT. That is probably why the NQ went slightly above that DP resistance zone. So here we had two areas on the 15-minute chart that were giving us resistance. Again, remember, these were either projected in advance. I mean, we could actually project the wave 5 in advance as well. We have WPT tools here that we could have actually projected that wave 5 up in advance as well. But the point being is that as the market was coming in here, we knew that we were at a high, therefore the larger degree trend was down. As such, we then look on the shorter term charts to now look short rather than long. So when we go to the NQ, oops, I'll just take that analysis off, that's what I was doing earlier, we should be orientating our trades to the short side. And if you remember right at the start of the video, that's why on the ES I suggested the long trade we had off here would not have gone very far. It would have then reversed back down, and that's exactly what happened. So let's look at the NQ. Okay, now let's look at this with eyes that now, rather than look at the STF and say, well, the trend was up, therefore we want to be looking for buy setups, we now know that this high here was at larger degree resistance. Remember on that 15-minute chart, there it was, and therefore the trend was down. So now we should be looking on our 3 and 5 minute charts for short-term short trades. In other words, looking to anticipate that the market's going to go down. So let's start off looking through the day here on the 3-minute charts. Well, we did get a setup here that would have resulted in a loss. Losing trades are acceptable because they are kept small and under control at -1. So let's just remember that. Yes, there was a losing trade here, a -1R, loss. Let's then have a look at this another trade here. Whoops, just clear the chart off. Another trade here, and that trade did actually get down to about this level where you were sitting on about 2.8 hour profit, so you'd probably have had your stop to break even. So this would have probably been a break even trade as it came up. Now at this point you may have got slightly frustrated, thinking, well, 2 trades haven't worked out, not quite sure what's happening. However, later in the day we can see we did get a lovely TS3 sell here, which is actually on a black STF, so that would have been a standard trade setup. But let's now move out to the 5-minute chart. Remember, we are looking for short trades because that's our large degree trend direction. So when we, again I'll take my analysis off because that's what I had left on from last night. Now here you can see how we did have a beautiful setup. Remember, this was our larger degree high. We had the initial decline down here, initial correction up, unfolded in ABC. This we then place our analysis on because we're looking for short trades. Remember, we are not looking at the STF color because we know the large degree trend is down. This would probably be a Holy Grail trade setup, so we'll be looking to take the trade down into the typical wave 3 WPT, but obviously the market closed before we got there, so we'd have then been stopped out or closed our position just on the close there. So here this trade would have actually had a short from this high here down into the close of the day for plus 8.2R. So can you suddenly see how the trades we had on a 3-minute chart earlier of minus 1R and then a break even were suddenly completely wiped out and put into profit very nicely indeed. Now, one thing the advanced traders among you can do, because you knew that the large degree trend was down, you were actually in this 5-minute trade here. Market goes down, comes back up again. Stops were at break even. So what you could have done is when this setup came in, and we then move back to the 3-minute chart to have this setup coming in here, you could have said, well, actually now I want to pyramid, or in other words add to my trades. So you would have been short off the 5-minute high here. You then have added additional trade here. Again, remember, we're running this down into the close, which would have been down here. Standard trade management on this would have been again another Holy Grail trade setup. So when it got to the typical wave 3 WPT, the STF was strong. So let's keep it the same as the 5-minute chart and come out at the close. So can you see how suddenly you would have added an additional short trade or pyramided for an additional plus 6.7R. Now if I add those together, 8 plus 6, just to keep it simple, would have been plus 14R profit. So can you see how this would have more than made up for, if I scroll back a bit, would have more than made up for the losing trade here and possibly the break-even trade here. And this is why it's so important to keep trades in mind in the terms of position sizing and profits in risk units, in other words, in relation to the initial risk, and that gives you a true impression of how the trades are unfolding. But the important point about this video is how these short trades were set up in advance by, on every single one of the 4 E-minis, we had this DP level projected in advance. That's important. You knew this level was a resistance level even before the markets opened, and as you can see, it nailed the high on the ES, it nailed the high on the YM, it nailed the high on the Russell Index, and also we had the 2 areas there for the high on the DP and the minimum wave 5 WPT there as well. So that then defined the large degree trend is down. We then looked for short trades because of that, and as we've already seen, we had a good trade on the 5-minute NQ. Here's a short on the 5-minute NQ down into the close for 8.2R. We then pyramided for an additional short trade off this TS3 sell here for an additional 6.7R. That wasn't the only short trade as well. If we go to some of the other trades, the other markets here, if we look at, for example, the YM, here we have on this particular trade, we had a lovely Holy Grail short off there on the 3-minute chart. If we go to the 5-minute chart, there's our TS3 sell there. So basically, whichever one of the USE minis you were looking at yesterday, it was a very, very good day, but it was a good day because we've managed to define the large degree trend by use of the 15-minute charts in advance. So this is a very important video and a good one to review quite a few times, because it shows how we use the 15-minute DPs to project our large degree trend in advance. Once we have the markets bouncing off these, we can then use our shorter term charts to then orient our trades in the direction of the large degree 15-minute time frames. And as you can see yesterday, it was a very, very good day with some very, very good and large profits on the USE minis.